Welcome back to Investing Talk Podcast. Today we're taking a closer look at Terawulf, a company operating in that dynamic world of digital asset mining and now high-performance computing too. You shared a bunch of information on them, financials, market takes, company stuff, and our job is to really unpack what's most important for you to understand.
That's right. We've got the Q1 reports, analyst views, strategic announcements, all of it. We'll dig into their recent performance, the strategic shift they're making, and, what's happening in the broader industry. We need to highlight both the potential and, frankly, the challenges they're facing.
Okay, let's get into it then. These recent developments, what do they really signal? Maybe start with the financials. Q1 2025, revenue apparently doubled year over year, $34.9 million, a 102% jump.
Did, and that growth seems mostly driven by a big increase in their hash rate capacity, up 53%, hitting 12.2 exahashes per second. Plus, they mined a decent amount of Bitcoin, around 372, which works out to about, 4.1 Bitcoin a day?
Okay, strong top line, but profitability, that seems like a different story.
Yeah, quite different. While revenue shot up, their non-GAAP adjusted EBITDA, it actually fell sharply. Went from a positive $31.9 million in Q1 last year
Wow.
to a loss of $4.7 million this first quarter.
Ouch. And the main culprit looks like power costs.
That seems to be the primary driver, yes.
Yeah.
Costs were up 65% compared to last year. They hit 0.081 per kilowatt hour.
That's a substantial hike. That'll definitely squeeze margins. And interestingly, one source mentioned a slightly different Q1 revenue number, $34.4 million, which would actually be a decrease from Q1 2024.
Right, a 19% decrease according to that source.
Yeah.
So we do have a bit of a discrepancy in the reported top-line figures.
Something to keep an eye on. Definitely need to verify that.
Absolutely.
Yeah.
But regardless of the precise revenue number, the trend of rising costs hitting profitability seems pretty consistent across the board. And the EPS misconfirms that too. Reported negative $16 when the street expected negative 7 cents.
And a net margin of negative 80-something%.
Yeah, negative 80.94%. It really paints a picture. Strong earnings at the top, but boy, the expenses underneath are significant.
So faced with those pressures, it looks like Terawulf is making a big move, a strategic pivot, they're calling it, getting into high-performance computing or HPC hosting alongside the Bitcoin mining. That feels like a major shift.
It is significant.
Yeah.
And it seems like a direct response to some of the, let's call them headwinds, in just pure Bitcoin mining profitability right now.
Yeah.
They've already landed their first big HPC hosting client, apparently leveraging the infrastructure they already have in place.
Right. Trying to diversify, build other revenue streams makes sense when crypto prices can swing so wildly.
Exactly. And if you look around the sector, this isn't unique to Terawulf. This move into HPC hosting, it's becoming a bit of a trend.
Okay. And alongside this pivot, they're still really hammering home their green energy commitment, right?
Yeah.
Using nuclear and hydropower.
They are. They continue to emphasize that use of sustainable zero-carbon sources, which, in today's climate, aligns really well with ESG principles. That could definitely attract certain types of investors.
Yeah, the sustainability angle seems increasingly important. So how's the market taking all this news? Sounds like the stock's been bouncing around a bit.
It has been volatile. After the Q1 numbers and the HPC announcement, the stock actually closed up over 8% that day, May 8th, at $3.30.
Okay, a positive reaction initially.
Initially, yes, but you have to zoom out. Year to date, the stock is still down significantly. So there's clearly some market skepticism about this transition in the profit picture.
Right. And earlier that same week, it was up on green mining news, then down on regulation worries.
Precisely. Up around 4%, maybe May 6th, on positive feelings about green Bitcoin mining, then down over 3% the next day because of broader worries about potential sector regulations increasing. It shows how sensitive the stock is.
Got it. But there was a new buy rating recently with a $4 price target.
Yes, a new analyst initiation. Seems like there's some optimism there, specifically citing those green initiatives and maybe a sense that the regulatory environment could actually improve.
Interesting. So some analysts see a path forward despite the current headwinds.
Seems so. They might be betting that the green angle combined with the HPC diversification could really pay off, especially if regulators become a bit more, shall we say, crypto-friendly or at least clearer.
Okay, let's maybe zoom out to that bigger picture. Terawulf isn't alone in facing rising costs, especially power and regulatory question marks.
Not at all. These are industry-wide challenges. High operational costs, particularly electricity, and that ongoing uncertainty about regulations are major themes for pretty much all miners.
And is that diversification into HPC something we're seeing widely as a response?
We are. It's becoming a more common strategy. Companies are looking for ways to generate revenue that's maybe less tied directly to Bitcoin's price swings. And you mentioned potential regulatory easing. There's some chatter about maybe less aggressive enforcement from U.S. authorities, possibly more cooperation between the U.S. and U.K. on crypto rules. That could create a more favorable backdrop if it pans out.
Right. Okay, so let's try and drill down into the specific risks and opportunities for Terawulf itself. Risks first. Those rising power costs are clearly number one.
Absolutely. They directly hit the bottom line, as we saw in Q1. That 0.081 per kilowatt hour figure is quite high.
And regulation is always a risk in this space. Plus that debt-to-equity ratio you mentioned, 2.09, that sounds high.
It is quite high. It indicates a significant reliance on borrowed money, which isn't necessarily bad if things are going well, but it adds financial risk if profitability stumbles or interest rates go up.
And negative ROE and ROA, return on equity and assets. That suggests they're not efficiently using their capital right now.
That's what those metrics imply, yes. Difficulty generating profit from shareholder investments and the company's overall assets. And of course, you always have the inherent challenges of Bitcoin mining itself, the halving, cutting rewards, network difficulty going up. Those pressures are constant.
Okay, quite a few risks. But on the flip side, the opportunities, this HPC move could be substantial, right? A whole new revenue stream.
It definitely could be. If they execute well, it diversifies their income and taps into a potentially large and growing market for computing power.
And that green energy commitment, could that become a real competitive advantage?
I think it could, especially long term. As more focus falls on sustainability, having a zero-carbon power source could be a major draw for both mining pool partners and HPC clients. It aligns with those ESG trends we talked about.
Plus, you have that positive analyst outlook suggesting potential upside if things fall into place, and they're planning to expand their HPC data halls.
Correct. That expansion is a key future growth catalyst to watch if they can build out that capacity successfully.
You mentioned earlier they can leverage existing infrastructure for HPC. How much of an advantage is that, really?
Potentially quite significant. Building data centers is expensive, especially getting the massive power feeds and cooling systems needed. Miners already have robust versions of those, so they might be able to repurpose or build out HPC capabilities faster and maybe cheaper than starting completely from scratch. That's a potential edge.
Makes sense. Okay, what about sentiment? What are other investors saying? Are people excited, worried?
It seems pretty mixed, leaning towards, let's say, cautiously optimistic. You see definite enthusiasm for the green energy story and the diversification into HPC. People like those strategic directions.
Well,
But that enthusiasm is definitely tempered by the recent losses and the stock's volatility. There's skepticism, too. I think many are in a wait-and-see mode, want to see if this pivot actually translates to better financial results.
okay. Looking at the balance sheet snapshot again. As of March 31st, $219.6 million in cash and Bitcoin. That's some cushion.
It is. Provides some flexibility.
But the debt. Around $500 million outstanding. That's a big number relative to the cash.
It is. That's the other side of the coin. Managing that debt load while funding expansion and trying to turn profitable, it's a balancing act.
The revenue growth, looking back at the end of 2024, was strong at over 63%.
Yes, the growth potential has been there. So the key strengths are that growth capability and the zero-carbon energy focus. The red flags remain that high debt ratio and the negative returns on equity and assets indicating efficiency challenges.
And how do they stack up against competitors? You mentioned names like Core Scientific, Riot Blockchain. Is Terawulf's green focus and maybe their structure a key differentiator?
It could be. Their focus on zero-carbon power is definitely a differentiator compared to miners using less sustainable sources. And they talk about a vertically integrated model. Does that give them an edge?
How so? What does that mean in this context?
Well, vertical integration usually means controlling more parts of your supply chain. For Terawulf, it might mean things like developing their own sites, maybe having more direct control over power sourcing. The potential benefits are better cost control, maybe more operational efficiency, and resilience. Especially with green energy, maybe they have more direct access or better contracts for their nuclear and hydropower.
I see. So looking ahead, success really hinges on getting those HPC data halls built and filled, right? While managing all the risks.
That's a huge part of it. Executing the HPC expansion is critical, but they also need to navigate potential regulatory changes, positive or negative, and of course the inherent volatility of Bitcoin's price. Those remain key external factors.
So summing it all up, Terawulf is, well, it's a complex story right now. You've got impressive revenue growth potential, this forward-thinking commitment to sustainability, and a big strategic bet on diversification into HPC.
Definitely. But you also have very real financial challenges. Profitability is currently negative, and the debt level is significant. That pivot into HPC feels like the main thing everyone's watching. Will it work? Can it transform their financial picture?
Right. Which really leads to the big question for you watching this space. How is Terawulf going to manage this juggling act? Balancing the huge capital needs for both ongoing Bitcoin mining and building out this new HPC infrastructure, while also tackling that $500 million in debt and trying to get back to profitability.
That's a critical question. Their ability to navigate that complex equation will likely determine their trajectory over the next year or two.
Absolutely. We've covered the main points from our sources, but we've really just scratched the surface here. For much more detail, you should definitely check out Terawulf's official investor relations materials and their SEC filings. Thank you for exploring this with us today. If you found this analysis useful, please do subscribe, like this discussion, and leave a comment. We really appreciate your engagement. And maybe one final thought to leave you with. In a world that's increasingly focused on sustainable tech, could Terawulf's early, strong bet on green energy eventually become their ultimate competitive advantage? Maybe even enough to overcome the current financial turbulence. Something to think about.